Good afternoon, George Cavaligos from the floor of the CME group. Today I'm going to give you the disclaimer first because it was such a crazy day. Futures and options trading is not suitable for everybody, and there is a risk of substantial loss, as some of us down here on the floor can attest to today. Markets were lower last night in the equities markets. Treasuries were a little bit higher. Came in this morning and I saw that open interest in the treasuries on the move up to new recent highs was actually falling. Technicians like myself say that is shorts covering, and that is not the basis for a sustainable rally. I sent out the early morning email to my clients and prospects and said that yellow warning lights were flashing, and then if you were long, it was time to move your stops up, take some chips off the table. I had actually thought that the high in the treasuries in the 10-year, especially at 129.09 plus, was nothing special to me. Looking at some things going back, minor trend line came through there, but it was old. I didn't even think it was important. Thought we'd get up all the way to that old broken resistance point that we had highlighted the last couple days at 129.12, 129.14 area. We didn't quite get there. Sometimes in trending moves, markets will fall short of optimum resistance levels. You have to be flexible. You have to look at the signs, and the signs were there this morning. We saw the open interest falling. Equities were under a lot of pressure, and we weren't really rallying that much as the pits were opening. Equities sort of tested the overnight lows at 1185 on the S&P. That looked like a pretty important support area, and then immediately started rallying. We got up on the S&P up around 1:30ish Chicago time, sort of late afternoon, and we were sitting around 12:15, 12:16, kind of a big resistance area. The market started coming off, Treasury started rallying again, and it was just getting really choppy. And then all of a sudden there were some rumors flying around about a story out of Europe that the Germans and French had agreed to a €2 trillion bailout package that was going to be presented at this coming weekend's emergency summit meeting in Europe. Equities exploded higher. I think in the matter of 30 minutes we traded close to almost 300,000 contracts in the E-mini, and it rallied from around 1220 to 1230, 1229, 1229.75 high. Might be a double top there. Treasury sold off really hard on that. The 10-year traded down through last night's lows. We hit stops, went all the way down to 128.12, and now we're hearing that this story might not be true, and the markets are snapping back. 10-year right now, 128.20. Just whipping around like crazy here. I sent out the email this morning. We've sort of been favoring, being long a little bit as the market was somewhat perhaps building a base down here. Got up to some levels at 129.09 that were close to resistance levels that we thought were going to be important. And now we've got minor reversal days. Aggressive traders, I talked to some people in the chat that we support here, and recommended this morning that you take a look at buying the Novi 10-year 128 puts. They were trading for 8 ticks at the time. They go off this Friday, so it's got to be a scalp trade. That thing's been whipping around. It traded up to 10, down to 5, up to 14. It's probably coming back down around 10 right now. Can scalp these things, and from the short side, you got to be nimble. I think here the markets are very nervous. There's rumors of downgrading, of the rating agencies downgrading France, as we saw with these stories coming out of, I think it was a UK newspaper, about the EFSF being increased to 2 trillion euros, later denied by Reuters or Dow Jones. There's a lot of headline risks at the moment, and a short-term sort of scalping viewpoint is probably the way to go. Gold got hit really hard this morning. At one point, I think we were down 45, close to $50. As soon as that sort of EFSF story came around, gold shot back up. Gold's going to be very sensitive to governments printing money or QE type activities, which is what this EFSF program has the scent of. So, you know, gold still looks a little shaky. It's closing lower. It's breaking down out of a rising wedge. Projects a retest of the, 1532 lows. I don't know if it's going to get back down that low over the next couple weeks, but it's something to keep an eye on there. God, that's it. That's enough. Be careful. Trade small. Trade carefully. Be very risk averse. Pick your spots. You know, 1 or 2 trades a day. If you can chip away a little bit at it, that's all you need to do right now, guys. We're hitting for average. We're not hitting for home runs.